This is Matthew Cratter from Bitcoin University. Today I want to talk about tokenized assets versus Bitcoin. This is based on this tweet from Pomp. All of Wall Street is going to get tokenized. Markets will become 24/7, 365. Bitcoin was the first. Tokenized gold. Stablecoins were next. Tokenized fiat. Eventually every financial asset will get tokenized. Just a matter of time. Tokenization, this is when you take a real world asset like real estate, for example. You then issue tokens that represent that real world asset, and then you allow those tokens to change ownership via transactions that are recorded on a blockchain. It sounds pretty cool. Larry Fink certainly likes the idea as well. Let's tokenize a house in San Francisco, let people trade it on a blockchain. This would be pretty cool. Anyone could buy a fractional share. You get really quick settlement. But here's the problem. This San Francisco house now has a squatter. Actually, it has 10 squatters who have been empowered by the morons who run San Francisco. So you can buy tokens that represent this house on the blockchain, but nothing that you do on the blockchain is going to get rid of those squatters. For that, you need police, you need courts, you need judges, you need real world enforcement, you need a real world legal system. So putting real estate on a blockchain is really just LARPing. There are no enforcement mechanisms on a tokenized real estate blockchain. It's great for venture capitalists like Pomp, who will presumably award themselves a juicy premined, in other words, an insider allocation of tokens that they can dump on retail investors on Coinbase. But putting these things on a blockchain really is just a giant LARP. Real world assets depend on real world enforcement mechanisms like the judicial system and police. And when the city of San Francisco or the US government, or maybe someday the Chinese government wants to confiscate that house in San Francisco, there's nothing that you can do with the blockchain to stop them. If you're enjoying this video so far, I just ask you to help to support the channel. Click the subscribe button if you're not already a subscriber. Click the like button, leave a comment, and share this video with a friend or family member. Now, the same is true for gold. Tokenized gold traded on a blockchain still needs to have the physical gold backing it, being stored with a custodian, with a bank, with some sort of holder like this. And when you do that, you run into all of the same real-world problems that have plagued physical ownership of gold over the centuries, like confiscation. For example, FDR confiscated all Americans' gold in 1933 through Executive Order 6102. You have the problem of confiscation, the gold from the custodian being confiscated. You also have the problem of verification. Can we trust JP Morgan or the US government that there's enough actual physical gold sitting there in the vaults? What if most of it is gone, or it is gold-plated tungsten bars, and the tokens are not fully backed by physical gold? So you run into all these problems. Money backed by gold failed spectacularly in 1971 and the years leading up to it. Owning gold IOUs like tokenized gold doesn't help you at all when you most need the real thing. And the same is true for stablecoins, for fiat currencies. It's great that people in developing countries have access to US dollar stablecoins like USDT, like Tether, but anytime the US government sneezes, Tether is of course happy to freeze those stablecoins, as they did as part of these Venezuelan sanctions, as they did here as well, freezing 41 crypto wallets. For the most part, tokens on a blockchain is a really stupid way to do things. Blockchains are slow, they're inefficient. For almost every other purpose, a centralized database is much better than a blockchain. It's faster, it's more efficient, the user experience is better. And this is why PayPal, Zelle, Venmo, all of these companies have great user experiences, because they run their money on centralized databases. Your money arrives in seconds. The UX is great. The only problem is when one of these services decides to deplatform you because of your medical choices, what you said on social media, etc. So this is the problem. Centralized databases are easy to capture and control because there is a center that can be captured. So they have very weak censorship resistance. This is really the one time it actually makes sense to use a blockchain, is when it comes to money. You want the money used by society to be neutral, to be fair, to be ethical, and to be beyond capture. And this is what Bitcoin offers by being a globally distributed ledger with no one in charge. Using a blockchain to create neutral global money makes a lot of sense, since you don't want to have a centralized database that can be controlled or captured by anyone. Bitcoin has already achieved this, so there's not going to be another global money protocol that replaces Bitcoin, just like there's not going to be another protocol that replaces TCP/IP for the internet. The foundations have already been laid for the internet and for global money in the form of Bitcoin. So venture capitalists will continue to try to sell you use cases for their new blockchains, but the primary use case for these new blockchains is to print up new tokens for the VCs that they can dump on you. And this is why VCs are incentivized to try to sell you a blockchain instead of a centralized database. We can see here the initial token allocations, and the red or pink is all the insider allocations, the pre-mines of tokens. And this is the main business plan, dumping tokens on retail investors for many of these companies. If you want really fast settlement for Wall Street assets like Pomp is talking about, use a powerful centralized database. You don't need a blockchain to tokenize an asset. For example, the gold ETF, GLD, doesn't rely on tokens. It relies on a centralized ledger that keeps track of how many shares have been issued and how much actual physical gold is backing those shares. You can choose to trust the issuer of the ETF or not to trust them. But putting gold on a blockchain is just another giant Larp. If, for example, for GLD, if State Street controls all the nodes in this network, then you're still no better off and still have to trust them, whether you're running it in a traditional database or running it on a blockchain. Even if you and I run some nodes on this network, it's still a meaningless exercise. This gold network, this GLD network with tokens, we might call it, it'd still be a meaningless exercise since we would still need to trust some bank or custodian that there's real physical gold backing the tokens and shares. So the blockchain is unable, again, to provide this real world enforcement. This is why Pax Gold doesn't make any sense. And I'll link to this video in the description notes below talking about that. When Pomp says that Bitcoin was the first, it was tokenized gold. This is not true. Bitcoin is absolutely not tokenized gold. It's not backed by gold like a gold ETF. Bitcoin is a network with its own digital asset, BTC. And it's important to be clear about this. What Pomp does is he sort of elides the lines to make his case. But Bitcoin is not tokenized gold. It's a network with its own digital asset. And here's the most important thing. Bitcoin enforces its own ownership guarantees. It doesn't rely on courts or police. And Bitcoin only needs to check to see if you can sign with your private key that corresponds to the Bitcoin that you want to send. Asset ownership is enforced by the Bitcoin network itself, and this can never happen with any other token network. By the nodes, this asset ownership is enforced by the nodes that run the software and enforce the consensus rules. Here are all the nodes spread on every continent on Earth. And this is a very special network of nodes. It's a network of nodes that grew slowly and organically over time. These nodes are mostly run by regular people, regular Bitcoiners, who want to verify that the Bitcoin that they're holding is the real thing. So these are what are called economic nodes, run by people who own and love Bitcoin and are incentivized not to run code that increases the 21 million supply, for example, thereby diluting their ownership. You could spin up a network of nodes for your own new tokenized real-world assets, but this is just another form of decentralization theater. If BlackRock and or other banks run every node for this new token and its network, then they're still 100% in control, even though there's nominally a network and a blockchain involved. Again, you'd still be much better off with a centralized database that keeps track of asset ownership. Even if you took real-world assets and tokenized them and then somehow used the Bitcoin network itself and the Bitcoin blockchain itself to keep track of them and to transfer ownership of them, it still wouldn't matter because real-world ownership and enforcement of that ownership would still be handled for every other token except for Bitcoin. It would still be handled by BlackRock, by regulators, by courts, and by the police. So this is what makes tokenization so pointless. The government can seize your real estate, put up a sheriff's line, do not cross boundary around it, and there's nothing that you can do. By contrast, they cannot seize your Bitcoin unless you share your private keys with them. They can kill you, but they still won't be able to get their greasy hands on your Bitcoin, which is not true for bonds, stocks, real estate, gold, or any other real-world asset, whether tokenized, whether securitized, or not. BTC is the only native asset of the most powerful and secure computer network in the world, the Bitcoin network. Bitcoin BTC is a better store of value than stocks, real estate, gold. BTC is more portable. BTC is more censorship resistant. Bitcoin is this unstoppable freedom money that cannot be debased by central bank money printers. So let the fools buy tokenized assets and other Wall Street and VC and crypto schemes and scams. As for me, I'm just going to keep buying BTC itself. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. and let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.